Welcome back, guys. That was a short break. I believe we are back and re-energized and ready to talk about the types of taxes. Okay? So types of taxes. Let's see. Tatua.
Yes.
What are these types of taxes?
Types of taxes will be determined by a taxpayer, whether you're an individual or you're a company, and also determined by your types of activities, and to some extent level of activities. So it's determined by whether it's an individual, a company, as I said, and your types of activities, what you undertake.
Okay.
Yeah.
Okay.
There are transactions that are leading to the earning of the income. For example, there are some taxes that are paid by an individual and not paid by a company. There are taxes that are paid by a company and not by an individual. But there are those that are paid by both a company and an individual.
Okay.
Yes.
Okay.
Okay. For example, we have the individual income tax. This one is paid by an individual, a person, on the income they earn throughout a year, a certain year. For example, before the end of June this year, you're supposed to file as an individual all the income that you earned in the year 2020. Yes, and if you do not make any income and you have a PIN, you need to do a nil return. Nil meaning zero. Yeah. You need to file a nil return to declare that you didn't make any income. But if you earned something, you need to declare that and pay any tax that may be due from that. Yes.
Okay. Okay, and what about for corporates also?
For corporates,
is it the same thing?
There's also a corporate tax that's paid by companies. Companies that are making, that are in business. A registered company that has its own PIN, it needs to declare the income, all the transaction, the income it earned for that year. And the rates are different. So if you have a registered company, you need to declare. If the company did not undertake any business, you also need to file a nil return if you did not undertake any transaction. Yeah, that's one of the income that's different between from an individual and a company.
So if they didn't make any transactions,
yes.
Is it any transactions or just profit? If they didn't make a profit, or is it done?
It's about transaction. If you had transaction but you made loss, you need to declare that. Yes, you need to say, this is how I made the loss. This was the income I earned, and these are the expenses that I had, and the difference between my income and expenses is bringing this loss.
Oh, so you have. So then that can that be filed as that nil return, or is it?
No, you don't file that as nil. You file it as a loss.
Okay.
You don't pay. You won't pay tax on loss. Though there are some developments, or there was a tax being introduced for everyone who makes a loss, not even a loss.
Yeah.
If your gross pay, the 1% of your gross income is less than the tax that you should pay. That includes anyone making a loss. You're supposed to pay a certain tax, 1%. It was called minimum tax.
Okay.
Yeah, you are supposed to pay 1% of the minimum. I think Mr. Nixon is still in court. Yeah.
Yeah. Okay. I think we'll talk more about that maybe. You said nil returns about individuals.
Yes.
We had this scenario of students maybe taking their KRA PIN very early. They didn't get even a job, or maybe they thought they will get paid in the internships, and maybe they didn't get paid. So what will they do? Nil returns, or is it just leave it?
If you have a PIN, you need to file a return. In the case of such a student, they didn't have an income.
Yeah.
They didn't get a job, or they were not in a business. So they need to file nil returns. If you have not filed for some previous years, because maybe for some reasons you didn't know, didn't have the knowledge, you need now to file for the years the past years.
Yeah.
Okay, you need to file for the past years. Because it will accrue some penalties and interest.
Yeah.
but you can do we call it?
Maybe, I don't know, submit a letter or something.
No.
Yeah.
A waiver.
Oh.
Apply for a waiver.
Yeah,
you write a letter. You do that on your KRA portal, tax portal.
Okay.
You can apply for a waiver. The commissioner will decide
whether
what to do with that. Yeah, but if you have not filed for some several years, you can file those near returns. Yeah, maybe you took your PIN in 2016.
Yeah.
You can file near return for 2016, 2017, 2018, 2020. Those will be 5 years. Yes.
Wow. Hey, man. Yeah. Students, pay your taxes.
But also maybe, Maxi, I think just to maybe add, I think most students apply for KRA pins because of maybe help. Help would be the bigger one. And then maybe because they need to also open a bank account, so the bank will request for the pin.
So let me just ask you maybe before that. What do you mean, as in because of help? Is it required by the government that they register, I don't know, for the PIN so that they get the help?
Maybe you'd find in the help portal when you're applying for the help loan.
Oh, that
KRA
PIN is required.
And then now you have to apply.
Okay.
And then as Tatua has said, if you have a PIN, you have to file a return. So be it a nil return. So a nil return is just an example. But if you have a PIN, that's where it begins. If you have a PIN, you have to file return. So even our members, don't say I didn't make any income in 2020. So there's no need to file a. If you have a PIN, you have to file a.
You have to file a return. So guys, small businesses. There's this thing about small businesses. How small can it be? How small can it be? I don't know. It's rather, I don't know how we can discuss about this. Maybe you can just tell us just a brief, or maybe I think we'll just a brief explanation for the small businesses. I made a hustle, got a shoe, sold it, made a hustle, got some cabbages from somewhere, made a hustle and sold all the stuff. And I get some money. Should I also pay for such, or will I just use the money for my responsibilities and then?
Well, in an ideal country, whether you have a kibanda making some income, I think it should be fair. And it's only right. You pay, you declare your income. Yes.
Okay.
You should.
Yes,
we also have, small businesses can be quite relative. There's someone with a kibanda. There's someone with a shop somewhere. Someone has a wholesale shop somewhere.
Someone is selling things just from home.
Yes. And I think for individuals, there's a tax for everyone. Everyone with a PIN. There's a tax for every income. For example, let me first digress from small businesses. Let me go to individuals. There's someone who's employed. An employed person is supposed to pay PAYE. Pay as you earn.
Okay.
Yes, this one is collected and filed by the employer. Yes, the employer will calculate
file it for you.
Yes, and file it for you.
Okay.
So it's the duty of the employer to file, to submit your PAYE to KRA. Yes, so they deduct it from your salary and they submit it. There's someone who is a consultant, maybe a lawyer, a consultant or a professional. They have withholding tax. It's deducted at the point of payment. Let's take an example. You are a lawyer. You offered me services. I'll pay you. So I should deduct some amount of money called withholding. Withholding tax and submit it to KRA on your behalf.
Okay.
That one is cut at the point of payment. Yes, that's where you deduct it.
Okay.
That's on withholding. Then we have others. Maybe Nixon can handle other types of taxes.
Thanks, Tatu. I think in terms of maybe the broad ones, you would say PAYE, maybe VAT. VAT, I think it's another broad one. And this is a tax charged on added value. So it's referred to as value-added tax.
Value-added tax.
Yeah, so anything that you add value, it has to be taxed on VAT. So for example, you are a farmer, you milk your cows, Then out of that milk, you generate yogurt. So there's a value you've created to the milk. So you'll have to file for VAT. And we have three, just for our members to know, we have 3 stages or maybe 2 broad categories of VAT, for example. We have vatable items and non-vatable items. So non-vatable items are the ones which don't have VAT. Call them they are non-vatable. And then vatable items are those which have VAT, which are in 3 classes. We have VAT at 0%, VAT at 8%, which are petroleum products, and then the general one is VAT at 16%. So it applies differently. And someone maybe will ask, what's the difference between VAT at 0 and not? I think that it's a bit technical because there's something there's a way VAT is calculated. Something it's very technical. Maybe we'll not get it.
We need a blackboard for that, eh?
Yeah, but basically, yeah.
Let me pick from there.
Yeah.
On VAT, who should pay VAT? If you are supplying goods, maybe you have a shop or you are a supplier for something.
Yeah.
And your supplies for a certain...
You're a supplier for yogurt.
Maybe you're a supplier for yogurt or any other product. And your supplies, gross supplies go beyond 5 million a year. If your supplies go beyond 5 million Kenyan shillings per year, you must and you should register for VAT.
Okay.
If you are making below that, you can decide if you want to. Yeah, that one is optional. You can do a voluntary registration for VAT.
Okay.
But if you supply goods worth more than 5 million per year, you should register for VAT.
Wow.
Yes.
Wow.
And the good thing about registering for VAT is that the VAT you are charged when buying, you use it to reduce the VAT that you charged when selling. It's called input VAT when you're buying, and output when you're selling. When you buy something from a supermarket, there down you see VAT calculated.
Yeah, definitely.
Now the supermarket will file that VAT. You send it to KRA. But you see, the supermarket bought the goods and it also charged some VAT. So the VAT that it was charged to buy those goods, it should now be subtracted. Okay. There are 2 VATs here in a supermarket. The one they had when
they bought the product,
they bought their stock.
And now when they are selling.
When they are selling.
Yeah.
So they should submit to KRA the VAT that they have charged you, but they should less what they were charged.
Oh.
So for example, if at buying they were charged 100 worth of, just an example, 100 worth of VAT. And when selling they charged you maybe 120, a total of 120. Now they should pay to KRA 120 minus 100. They should pay 20 shillings. Yeah, that one is deducted. Yes.
Hey, guys.
We also have other types of taxes.
Which one? We can just take them.
Yeah, there are people who have rental houses.
So rental taxes.
Plot somewhere. You have rental income. Yes, we call it. There is something called monthly rental income. So if your rental houses or residential houses make an income of more than 24,000 per month, if you earn more than 24,000 per month, and a maximum of 15 million.
So there's a maximum and there's a minimum level.
Yes, minimum of 24 and a maximum of 15 million.
Okay.
You should file monthly rental income tax, MRI tax. That one is calculated at 10% of that. So if you're earning 24,000, you need to pay 10% of that.
Okay.
Yes, that's 2,400. Up to 15 million. So if it's beyond 15 million, now you do a company, you do a income tax return. Or if it's below, if it's 23,000 and 24,000 below 24,000, you do now an income tax return. Yes. But if it's between 24,000 per month and 15 million per year.
Wow.
That's per year. So it's okay. Yeah, per year. 288,000 per year.
Wow.
Let me make it simple. 88,000 to 15 million per year. In rental income, you need to file for monthly rental income tax, MRI return, and it's 10% of what you
of what you've earned.
No expenses are deducted, and that's a final tax.
Wow.
Once you pay that, you not pay any other tax.
Hey, Maxi, just to explain, as Tatua has quoted final tax, maybe people would wonder what Tatua means by final tax. As also you said, you don't deduct expenses.
Yeah.
So if you've collected rent of 25,000, you calculate on that 25,000. You don't maybe pay electricity, pay water. Then the amount which remains is what you tax. It's the gross amount. It's the gross you collect. And then that's what you file as a final tax. So you will not come and declare this again when you're doing your returns. So that will be done. So that's the meaning of a final tax.
Wow, guys. Man, this thing is getting on fire. Ooh, content. Hey, content. I mean, there's a lot of things we can explain. There's a lot we can explain and do. But guys, this thing is on YouTube, is on Facebook also. So guys, ask those questions on the comment section, and we'll reach out. We'll reach out to you also. But more on that later on. So on the types of taxes, are we done? Or can you just state them? Maybe just because of time, can we just state the rest? Maybe the remaining.
For businesses, businesses.
Yeah.
If you make at least 1 million per year, your business earns 1 million per year.
Yeah.
That's something to do with 84,000 per month. But not more than 50 million per year. You need to pay a tax called turnover tax. That's 1% on your gross sales.
Yeah.
Yes, that's someone who's making between 1 million to 50 million per year. In a business. You pay a turnover tax. That one is 1% on gross sales. We don't deduct any expenses. It's just that way. So if you made 1 million, you pay 1% of that. That is also a final tax.
Wow.
You won't pay further tax. We also have other taxes like advance tax. This one is paid by people who have vehicles in PSV, matatus, etc.
Yeah.
Those people
so
who
even
have
Uber.
Commercial vehicles. It's Uber, every commercial vehicle.
Any PSV.
Yeah, PSV and every commercial vehicle, including the trucks, trailers, lorries, pickups, any commercial vehicle. You need to pay an advance tax. That one, it's called advance tax. You pay it, and it's also that one. Once you pay it, you should declare it in your income tax.
Okay.
Yes.
Okay.
You should.
Okay.
Yes.
Okay.
We also.
I continue.
We also have a tax called capital gain tax.
Wow. Capital gain.
Yes.
So you're gaining something.
Basically, this is a tax that you're charged when you gain. The gain that you make on transferring a property. You have a property, you selling it.
Okay.
And now you have a gain. Basically, gain is the cost of buying it, you less the cost of selling it.
Okay.
Maybe you bought a property at 1 million.
Yeah.
You're selling it at 2 million.
2 million.
So you've made a gain of
1 million.
1 million.
Yeah.
Yes, you need to pay a capital gain tax. It's basically 5% of that. It's 5% of what you've gained.
5%.
So you are required every time you are transferring a property, you need to pay 5% of your gain. And you said gain is the cost of buying that. No, the cost of selling.
Yeah.
What you're selling it, you less the cost of buying it. You have made a gain. Of course, you've made a gain. Yes, you need to pay a tax. It's 5% of that.
Yeah.
Yes.
Wow.
Nick, I don't know if you have any other.
I think you've captured more, maybe all of them. Maybe the last one would be installment tax.
Okay.
So, for example, if you estimate your tax liability will be more than 40,000 in a year, so there is an option of paying installment tax. So it's just maybe a portion, so that because at the end you'll come and declare when you've closed your books of accounts, you have your financial statements. Those are what you'll use to file the final.
Is it installment,
yes,
not installation?
Installment.
Not installation. Yeah, installment, guys. Installment. So, okay, thank you so much, guys. Those are the types of taxes that we were able to cover in such a short period of time. But thank you so much. This thing is getting deeper and deeper, and we're going to take a break as of now. And then when we come back, we'll talk about the penalties and the offenses related to tax. Thank you so much. And again, guys, let's pay what is due. I love that 5% though. Thank you. Yeah, see you later.